MicroStrategy. Honestly, maybe we should just call them strategy at this point, right? Because they just made yet another massive move to stack even more Bitcoin. If you've been watching the charts lately, you already know MSTR is actually outperforming Bitcoin itself. And hey, on the surface, it looks like an absolute genius play. But lurking just underneath that skyrocketing chart are some massive, completely hidden risks that most retail investors are, frankly, just ignoring. So, is this stock a billionaire maker or is it a leveraged trap? I'm your host, and in this explainer, we're going to break down exactly how this whole machine works, expose those hidden risks, and give you a step-by-step playbook for how to actually handle this asset. Okay, let's dive into this right away, because we are looking at two totally different realities when it comes to trading this stock. In one reality, you've got the absolute dream scenario. MicroStrategy significantly outperforming Bitcoin. It's just flying, literally minting money for people who got in at the right time. But then you have the nightmare scenario. We're talking about a real-life outcome, where an investor who bet way too big on this leverage saw a portfolio meant for his kids completely crash. It went from $219,000 all the way down to $60,000. Ouch. That is the duality of MSTR right there. You are playing with fire, and if you want to avoid getting burned, you need to understand exactly what is fueling those flames. So, Section 1, the MicroStrategy leverage engine, and how it actually works. To really understand this engine, you first got to grasp the sheer scale of the fuel they're playing with. Over 200,000. That is the staggering amount of Bitcoin MicroStrategy currently holds on its balance sheet. We're talking about a stockpile worth roughly $12 to $13 billion. Think about that. What started out as a fairly standard, slightly boring software company has essentially morphed into a Bitcoin-holding behemoth under Michael Saylor's direction. It's kind of absurd when you step back and think about it. A traditional enterprise tech company just hard pivoting to become the ultimate crypto whale. But here's the kicker. They didn't just use their spare cash to buy all this. No, they used leverage. Here's a quick 3-step mechanical breakdown of how this leverage engine actually runs. Step 1, the company issues convertible debt. They're basically borrowing billions of dollars from investors with the promise that this debt can later be converted into stock. Step 2, they take all that borrowed money and just buy Bitcoin. Step 3, the stock price amplifies. Because they're using debt to buy an asset that's appreciating, they create this massive, massive leverage. When Bitcoin goes up, say 10%, MSTR often surges 15 to 20%. That's the upside everyone is obsessed with. But listen, leverage has no conscience. When Bitcoin drops, those losses get amplified just as fiercely. Moving right along to Section 2, 3 numbers that matter. Think of this as your investor dashboard. If you're going to trade or even just hold this stock, you've got to cut through all the daily noise and focus strictly on 3 key performance indicators. First up is BTC per share, currently sitting at roughly 0.006. This number tells you exactly how much of the underlying asset you're actually getting for your money. Second is the NAV premium, which is currently sitting around 1.8 times. We'll dig into what that means in a second. And third is their average Bitcoin buy price, which is roughly $60,000 to $65,000. Now that last number, absolutely critical. As long as Bitcoin stays above that 60 to 65K mark, the company's whole debt game is relatively safe. But if it drops below it, well, things get complicated really fast. Now, what's really interesting about this slide is the concept of the NAV premium, or net asset value premium. This happens when MSTR stock is trading at a higher price than the literal value of its underlying Bitcoin per share. Right now, like we said, it's at 1.8. Historically speaking, a premium under 1.4 times has been a pretty solid buy zone. But if you see that thing stretch over 2.5 times, yeah, no way. That is extreme danger territory. You're basically paying a massive markup for the Bitcoin you're getting, which leaves you completely exposed to a sudden market correction.
All right, Section 3, the worst-case risk scenario. Welcome to the danger zone.
We need to stress test this system for a minute. What actually happens when the market turns on us? Say, what if Bitcoin suddenly drops back down to $50,000? In that scenario, MicroStrategy's holdings instantly lose roughly $2 billion in value. But here is the truly terrifying part for shareholders. Their debt stays fixed. They still owe the exact same amount of borrowed money, but the asset they bought with it is suddenly worth billions less. And the crucial point here is how this violently impacts the stock price. If Bitcoin takes a painful but honestly relatively standard 20% drop, MSTR stock doesn't just drop 20%, it collapses by 40 to 50%. Why? Because that NAV premium we just talked about shrinks rapidly right alongside the asset drop. Remember that $4 billion in convertible debt they have? Well, if Bitcoin prices stay low, refinancing that massive pile of debt gets incredibly dangerous, crazy expensive, or just straight up impossible. This right here proves MSTR is an active management play. It is absolutely not a buy and forget kind of stock. Which brings us to Section 4, the Investor Playbook. Let's get into some actionable strategies. It is time to identify your personal risk profile so you know exactly how to engage or not engage with this stock. If you're an aggressive trader, your strategy is to trade the premium. Buy when the NAV is under 1.4, sell when it pushes past 2.3, and for sure always use a strict 15% stop loss. If you're more of a balanced investor, you'll want to cap MSTR at a maximum 5% portfolio allocation and maybe pair it with a direct Bitcoin ETF like IBIT to hedge your premium risk. And if you're a conservative investor, honestly, just buy Bitcoin directly or buy an ETF. Skip MSTR altogether. You simply do not need that amplified risk in your life. Real quick before we move on, I want to give you one highly actionable tactical pro tip. Never buy MSTR right at the market open. The leverage on this thing makes it swing wildly in those first few minutes. Do yourself a favor. Wait 30 minutes for that early morning volatility to settle down before you execute your trade. Trust me, it will save you from getting completely crushed by sudden opening turbulence. Finally, Section 5, the final verdict, the absolute bottom line. If you take literally nothing else away from this explainer today, remember this. MSTR is not a Bitcoin proxy. It is a leveraged bet on Bitcoin with a debt timer attached. If you go into this treating the asset like a safe, blue-chip stock that you can just hold forever without checking the premium or paying attention to the underlying debt structure, it is going to eat your lunch. This is a highly engineered financial vehicle. Treat it like one. And this brilliantly illustrates the massive contrast at play here. Basically, you're looking at two entirely different games. Michael Saylor is a legend in this space, for sure, but he is operating with a billionaire's infinite time horizon. He can just withstand massive multi-year drawdowns. But you, as an everyday investor, you do not have infinite time. You need strict exits. You must use MSTR as a tactical tool, trade that premium, and above all else, you have got to respect the debt. And that wraps up our 10-minute deep dive into the hidden mechanics of MicroStrategy. So I'll leave you with this final critical question. Based on the leverage, the looming debt timer, and that crazy NAV premium we just unpacked, are you buying MSTR? Are you sticking to buying Bitcoin directly? Or are you staying away from both entirely? Think hard about your own risk profile and make your move carefully. Hey, make sure to hit subscribe so you don't miss our next weekly explainer. Stay sharp, manage your risk, and I'll see you in the next one.